If we have another year like we did in 2024 for silver, it could reach an all-time high. I'll explain why we should be excited about 2025 and silver in this video as we explore. There is a real possibility, folks, that silver could break $50 an ounce next year. I'm not saying it's going to happen. We need to be realistic about silver's price performance. But if we have another year like we had this year for silver, that is very possible. But what's even more important is that it will narrow the ratio between gold and silver. I'm going to be referencing a piece here from Kitco that explains the industrial demand fundamentals that could narrow that ratio for silver. We could still see silver rise and spike as a commodity as opposed to just falling in line after gold, which, by the way, silver has outperformed gold so far this year, even with the latest pullbacks. But notwithstanding, silver has a lot more room to grow. And 2025 could be the year that it finally does break out above $50 an ounce. Now, silver has struggled to keep pace with gold over the past year as the yellow metal hit multiple new record highs while its gray counterpart largely remained pinned below $30 an ounce. You know, it's strange how they use these names. Gray, yes, if you tarnish silver, it is gray, but mostly it shines bright. And it is very reflective as a metal. So I don't know why they're calling it the gray metal. And technically, gold is its own color, and so is silver. But according to one analyst, since we've seen silver pinned down below $30 an ounce for a lot of the year, but it is certainly broken up above that, and it is comfortably above that even now, it could change in 2025. And the gold to silver ratio will start to moderate from its recent highs. In fact, as I record this video, the gold to silver ratio has climbed yet again. It is now at 85.78 to 1. And even at 80, that's above the mean and the normal of where the gold to silver ratio should be. Gold remains an investor favorite for hedging portfolios against various risks. But the shift from a soft landing to a no landing argues for a greater balance between defensiveness and exposures to economic growth, according to Julian Wee, who is a financial market strategist at UBS. Silver has historically been strongly correlated with gold, and while being better able to benefit from expanding industrial demand. Indeed, that is the case. In fact, silver is a metal that even if it doesn't, and by the way, this is just some analysis based off of what could be coming with an improved economic situation. It's always good to look for dips in silver's price, and we're going to see them in 2025 as well. So as you're buying, I want to encourage you to check out Summit Metals. They are the sponsor of the channel, and they have really good prices, fast shipping, and great service. That's summitmetals.com, where you can scan the QR code here. They're great people over there at Summit Metals. Now, as you think about what the market is going to be like, and we see the price start to climb up even more if trends continue for different reasons, well, that gives us some really bullish sentiment as to where silver's price could go. Now, at the end of the year, I will be giving my year-end price predictions for silver in 2025. How confident will I be? Well, let's continue and see what they say, the analysts are saying, and I'll give my assessment at the end. Amid the rise in geopolitical tensions, gold has emerged as a preferred way to hedge risks, we noted, highlighting that gold has risen as much as 35% and demand continues to be robust amid multiple risk events and falling policy rates globally. This month at least, gold seems to have shown itself as the choice hedge against the risk of slower economic growth and an acceleration of inflation. But gold is not the only precious metals whose price demonstrates an inverse relationship with risk aversion. Against the backdrop of resilient U.S. GDP growth, investors might do well to consider an addition to portfolios that retains a good amount of defensiveness while also incrementally adding to the ability of these portfolios to benefit from stronger economic growth. And that metal is indeed this one, silver. We join the list of analysts warning that gold is due for a correction after months of up-only price action, saying that the most recent gains were driven by growing expectations of a Donald Trump win in the U.S. presidential race, particular with to trade tariffs, a higher U.S. fiscal deficit, potentially slower GDP growth, and higher inflation. And I don't really understand kind of what that's talking about. I don't think anybody really expected that Donald Trump would win. I think it was somewhat unexpected, actually. The markets reacted. They fell accordingly. Silver especially got pummeled hard after that, but I think it's going to normalize as it starts to set in here. Data from the World Gold Council shows that total demand has grown 5% year on year, while the quarterly total value exceeded $100 billion for the first time. And we talked about that in a prior video. Demand also appears to be broadening out, even as Asian central bank demand remains resilient. Their third quarter of 24 was the first quarter since the first quarter of 22 that saw positive inflows from North American-based ETFs as the Federal Reserve embarked in its rate-cutting cycle. While UBS still recommends a 5% allocation of gold in a diversified dollar-denominated portfolio, expecting its price to rise $2,900 to $2,900 an ounce around September of 2025. Well, that didn't happen. We also said that silver is also a strong play as it's set to benefit from spillover demand. And that could be true, but again, they missed their mark on gold by September. Historically, the price of silver has since demonstrated a high correlation with the high price of gold. Since July 2020, the gold to silver price ratio has been largely constrained within the 75 to 90 range. That is true. I've tracked it, and that's right. This is especially salient from the fourth quarter of 2022, as both silver and gold prices rose around 70% during that time. While gold will likely remain the main vehicle for hedging risks, silver as another precious metal is likely to benefit as well. But in addition to that, silver also benefits to a greater degree than gold from resilient economic growth and growing industrial demand. That is the key, folks, here. Growing industrial demand and economic growth. If we do see a recovering economy, and we start to see job growth again and more spending and higher GDP, silver will likely benefit from that. It's something that might be useful for positioning portfolios to take advantage of the robust global economy while maintaining a degree of insulation against event risk in the coming months. Stronger industrial demand for silver will help propel the metal's price higher, he suggested. Now, there could be some headaches, and I've mentioned in a prior video that it may take a little while for that to occur, which means that silver's price might be subsided even for the first half of 2025. But in the latter half of the year, that's where we could see some big growth for silver's price. And it can happen very, very quickly, as we've seen already this year. Since March of this year, silver has been mostly up with some pretty big setbacks, but silver's done well. Recent data points out that the U.S. have pointed to a greater likelihood of a no landing scenario, benign GDP growth and inflation close to the Fed's target, and growth at or above trend rather than a soft landing, he explained. Additionally, we expect lower rates, not least of all in China, to kickstart a modest recovery in global manufacturing, which adds to silver's industrial demand potential. With its heavy use in tech and electric vehicle sectors, steady demand coming from the production of LEDs, solar panels, and applications in the medical field due to silver's antibacterial properties, we said industrial demand will likely see an additional demand for physically backed ETFs and holdings already rising from about 684 million an ounce in May to around 741 million in October. On the supply side, mining output should remain constrained in 2025. So there's already some great demand that we're seeing from May to October in silver. And that can't be nothing but relatively bullish for the metal, which means that the dips we've been seeing now are likely only temporary, and silver's price could continue to climb. And again, even the most conservative of analysts out there say that the demand supply fundamentals are very, very tight. And if there's not enough silver to meet that industrial demand, or if there is enough silver to meet that industrial demand, it's really getting close right now. And so we could see that officially cross over by any measure in 2025. And that's going to be good for silver's price. In other words, with some play in what's going to be happening in the coming months, we very well could see silver's price continue to climb up. And could it break records? It very well could. Yes, and this is a channel that is really muted in terms of its bullish nature on silver. I like to be as realistic as possible, but I'm telling you, there's a lot of factors that are really in silver's favor that could be coming in 2025, barring any potential market crash, bank failures, that type of thing, and strong economic indicators that could spike the price of silver, then it pull back a little bit. If we do go into a recession, that will not be good for silver. Mark my words, that will not be good for silver. We have to keep that in mind as well, too. And we could go into a recession in 2025. And that's why I think in the beginning of the year, it'll be tough. It could be tough for silver. We'll see. Additionally, it has seen the gold to silver price ratio rise from a recent low of just under 79 to around 84. Over the next 12 months, we expect this ratio to decline into the mid-70s, which implies an outperformance versus gold. We therefore advise investors to stay long on silver and or use it for yield pickup opportunities. I agree with that. I've always been a proponent of holding gold and silver, but especially silver through the good times and the bad times. And this does not mean we're not going to be in for some bad times for silver. Silver's price will fluctuate. It will fall. It will break resistance. It will fall below support. It's going to go in both directions, but I think overall, 2025 should be a good year for silver, according to these analysts. And you know what? I tend to agree. Does not mean you should make any purchases of silver based off of what I feel it's going to do, because that's just a feeling. And based off the data and the patterns that we've seen in the past, not only from a technical standpoint, but from a logistical one as well. They highlighted 5 leading indicators that supports the thesis that gold has to be in a confirmed secular bull market. Inflation expectations need to respect their long-term uptrend. The euro and the dollar cannot be trending strongly lower. Silver's futures market may not show excessive concentration in terms of short positioning, and demand for physical silver needs to go through the roof. And that's just it. Demand's got to really continue here. That is going to be the one catalyst. If it doesn't, well, all bets are off the table for sure. It's got to be a sustained and noticeable demand for this metal. Now, these indicators are mildly to wildly bullish right now, supporting a solid bullish case for silver in the years, plural, years ahead, according to these analysts. So we'll see. It'll be fascinating to see where this goes. Let me know what your thoughts are, but I tend to agree with this analysis more than not. Although, again, anything could change. And we've seen what's happened in the past. There are saying here that we could see silver move up. I still think it could hit $35 even before the end of the year. That's a tall order, but I think it's possible. They are saying by 2025 it could fall within the range of $48.20 to $50.25. We'll see. It's quite possible. And by the way, if this trend continues in the next several years, by the end of 2030, they say it could peak at $80 an ounce. We'll see. We'll see what happens. Let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.